Hi to everybody watching in, and welcome to day 3 of our Nordic growth seminar. Today we will primarily focus on the Finnish company. We have a wide range starting with private equity and fund managers to start with, but we will go to saunas, to cybersecurity, to e-commerce today. So very wide range. You can ask questions in the box down below and see the full program for today, also under the presentation. I think the presentation will last 15 to 20 minutes and then a Q&A where we will take the questions you have asked. I hope today will give some inspiration, to get a little bit away from our home bias as investors here in Denmark. It's everybody is a home bias, but let's hear some interesting companies. But for now, I will hand the call over to you, Arta. CapMan, private equity I put up, and maybe you can give us an idea how to get exposure to that segment without having 100 million in bank account for you.
Thank you, Michael. It's a pleasure to be here, and good morning to everyone. So my name is Atte Rissanen, and I'm the CFO of CapMan. And I'm today here to talk to you a bit about CapMan today, give an overview of our operations, as well as shed some light on our strategic direction going forward. Starting with CapMan today, and to give a little bit of background. So CapMan is a Nordic private markets pioneer. We were founded in '89, which makes us one of the oldest companies in the industry in the Nordic markets. We're listed in the Helsinki Stock Exchange. We have some 29,000 shareholders, so a fairly liquid share. Our market capitalization as of today, about 430 million euros. And right now we manage assets of some 4.9 billion euros from our fund investors. Of that capital, some 60% is derived from outside of the Nordic countries. We invest exclusively in the Nordic markets, but our investor base is quite international. We have 180 employees, and we have offices in all of the Nordic capitals, as well as in Luxembourg and in London. We have 3 main investment areas: private equity, real estate, and infrastructure. And within those investment areas, we manage some 20 funds that have then invested in more than 200 targets in their portfolios, consisting of private companies, real estate, and infrastructure assets. To shed some light also on our business and earnings model, I have this slide illustrating that. So our operation consists of 3 businesses. The first one being the management company business. This is where we manage that 4.9 billion euros of AUM and invest that for our fund investors. From this business, we get management fees, and when we are successful in our investment operations, we also get carried interest income, which is basically our industry lingo for performance fees from when we are successful in our investment operations. In addition to that, we have a very, very profitable service business. And finally, the third part being our own investment business. So this is investments from our own balance sheet. We have some 220 million euros of investment capacity, which we invest alongside our fund investors, mainly to our own funds. So that means basically that via investing in CapMan share, you also get direct exposure to these private equity funds, which typically, as you Michael mentioned, they are available only for large institutional investors. And from those investments, of course, we get investment returns. Looking at where that capital of 4.9 billion euros comes from, I already mentioned that we have an international investor base, but this gives you a bit more understanding on that. So 45% is from the Nordic countries, some 40% from other European countries, North America 10%, and 3% from Asia. In total, that's about 290 fund investors. So the real investors in our funds, they're big institutional investors. We have some examples here on the right-hand side, some quite well-known blue chip names here. Just to name a few, we have BlackRock, we have the Florida State Board of Administration, we have one of the largest pension institutions in Germany, BVK, we have the Los Angeles County Employees Retirement Association. So big investors who want to invest with us because they think that we can add value for them, especially here in the Nordic markets. And here to give some more flavor where we then invest that capital into. As I mentioned, we have several strategies here. I've highlighted a few. In the private equity side, we have our buyout strategy, which means majority investments into unlisted companies. Just a few examples: PDS Vision, that's a Swedish industrial software company; Sports, a Swedish sports supplements company; Hydroware, focusing on industrial lifting solutions; and Netox, a cybersecurity company. The growth equity side, those are minority investments into highly growing companies. We have cloud computing, autonomous driving, nanotechnology. Picosun is one of an interesting company that we have or had. We exited that recently to one of the global players, Applied Materials. You might be aware of them, but it was a very successful exit that we made just in Q2. In the real estate, we also have various strategies, but here I took some examples from our value add strategies that might be known also to our Danish listeners. So for example, Project Lighthouse we have ongoing in Aarhus, which I think is, well, it's a residential development project, and I think it's also the highest residential building, at least in the Aarhus area, if not Denmark in total. Then we have the Red Warehouse project in Kaspersbyen in Copenhagen, an old Kasperry location that we've transformed into offices, currently leased out to the Boston Consulting Group. Then we own the Ringsted outlet in Zealand, also in Denmark, just to name a few. In the infra operations side, we have, for example, Nordic, which is, or actually Nordic was exited now in Q4, but it is Norway's third largest ferry operator. Nydalen Energi, that's district heating in the Oslo region. Överturingen wind farm, that's a wind farm in Sweden. Skarta Energy, that's an interesting new investment that we just made, focusing on developing solar energy here in Finland. So maybe that gives some understanding of where our investors are from and what we then invest that capital into. And from the shareholder point of view, I'm very happy to state that CapMan is currently financially stronger than ever. Our AUM is at the record level of 4.9 billion euros, and our revenues and operating profit also stand at record levels of 48 million and 46 million, respectively, for the first 9 months of this year. We have a strong equity ratio, 51%. We have 58 million of cash in the bank, so good liquidity. And we also have been growing our dividend distribution now for 9 consecutive years. That's our objective, financial objective, and we aim to do that also in the future. Looking a bit on how our performance has been developing, so turnover and profits have both been experiencing very strong growth. Here we have the graphs from the past 5 years. From the end of 2017, we have basically been able to double the size of our business in terms of the turnover. And here I make a distinction between the management company fees, the service fees, and the carry. And this is due to the reason that carry performance fees, that's always subject to the investment performance, but the service fees and the management company fees, that's recurring revenue. So that gives a very nice base for and predictability for our profitability going forward. And speaking about profitability, on the right-hand side, you can also see our basically profits growing in total of nearly 30% per annum during this 5-year period. And I think we have good prerequisites for fee profit growth also to continue during future years. Here I have the operating profit breakdown from the first 9 months of 22. And this follows our basically the segment reporting that we have also in our financial statements. We have the management company business contributing by nearly 15 million euros. That's up 50% from the previous corresponding period in 21. The service business also growing strongly, and the profits developing very nicely. 4.9 million this year, up 60% from 21. The investment business, our own balance sheet investments, they've been doing super well during this year, also last year, but 32 million investment returns during the first 9 months this year. Other eliminations, that's basically our group costs at the modest level of 4.6 million euros, bringing the overall operating profit to the previously mentioned 46 million euros. And I also talked about our investment business, so our own balance sheet investments. This gives a better understanding on those. So as I mentioned, we invest only in private assets, mainly alongside our fund investors into our own funds that we manage. Of the 170 million currently invested, more than 100 million is in private equity and credit strategies. 43 million is in real estate, 15 million about in infra. The return targets for these investments, they vary depending on the underlying strategies. But in total, on a group level, we seek to get some 10 to 15% returns per annum. During this year, 30% per annum, so very strong as I mentioned, but also looking at the longer perspective, since 2016, 13% per annum, so we're well in line with our targets. If you compare that to the public markets during the same time period, that's an outperformance of more than 600 basis points, and I think that's at the level it should be. So outperformance from the private assets. Looking at our balance sheet, our financial position is very strong. We have good liquidity, equity of 137 million euros, and an equity ratio 51%, in line with our financial target as well. I already mentioned that we have good liquidity, so about 60 million of cash in the bank. And if we were to need further liquidity, we'll also have an undrawn credit facility of some 20 million euros that's freely for use for us. So strong liquidity that allows us to continue to make new investments and to support the growth of our fee business. And also we have financial stability, which I think is very valuable during these unprecedented times, to provide security in basically all weathers, all market situations. We also focus a lot on sustainability, and our ESG strategy has been performing or advancing quite well. It's been externally assessed, and we've been a signatory actually of the principles for responsible investment since 2012, and our ratings from the PRI are at very high levels. We also received good ratings from the GRESB for the infrastructure and our real estate strategies. Looking at our strategic direction and what we aim to do during the future, our vision is to be the most responsible Nordic private assets company. So we believe if we are able to achieve this vision, it will be the way forward for us to create the highest value for our shareholders, for our investors, as well as our other stakeholders. Basically, according to our mission statement, benefiting or creating value for the benefit of society as a whole. This vision is built around built on top of 5 cornerstones. So first of all, top investment performance through active value creation. We need to have a broad investor base and access to capital so that we get the capital that we can then deploy. We want to be a Nordic sustainability home runner. We need to have the top performance, the top people on board, and we need to have an attractive offering of innovative products and services. And when we have all these 5 in place, it almost creates a virtuous cycle that goes around and fuels our growth going forward. But if you look at our strategic focus areas now for the 5 years to come, we have 6 more concrete focus areas that we as a company are focusing on. First one being to continue to deliver top investment performance through active value creation. We want to scale up our existing strategies and products driven by our performance. We want to integrate ESG as a core theme in all of our business activities. We want to develop CapMan as a home for top performance and be able to attract the best talent in the industry. We want to drive shareholder value through a combination of growth and improving earnings quality. And finally, we want to also support our growth by launching new products and also inorganically through M&A in order to accelerate our strategic agenda. Overall, our ambition is to double our AUM to 10 billion euros during the next 5 years. And I speak a lot about performance, and that's the reason behind that is that performance is the number one prerequisite for our success. When we perform, then growth naturally follows. So looking at some numbers right now, or during the past 5 years, the share of our funds that have been performing according or above their target return rates, the hurdle rates, which is also the threshold for us receiving performance fees, it's been 80%. During the past 5 years, our target is that by 26, 100%. Benchmarking against our competitors, some 40% of our funds right now are in the top 25% within their peer group, so in the so-called first quartile. That's a good result. We believe we can do even better. We aim to have 2/3 of our funds in the top quartile by the end of 26. And as I mentioned, performance leads to also growth, and our ambition is also to scale up the existing strategies and products. That's also where the majority of growth is expected to come from during the future years. And if we also look at what's been happening during the past 5 years, and I take that time period because that's basically when we've been under the current management. So it's a longer time series, but you can see from 2016 onwards, I already mentioned that we've been able to double basically the size of the business during the last 5 years. So now our aim is to do that again. So acceleration and scale up of operations now going forward. As our business grows, as we scale up, that basically also leads to development of our fee profits and our fee profit margins. So as we grow, the operations scale up, that leads to higher profitability and also in absolute terms, higher euros in terms of the fee profit that we are able to generate. We can also see that trend historically, and we expect that to continue strongly during the future years. I mentioned performance fees, and right now we have 2 funds generating performance fees, but in addition to those 2 funds, we have 12 more funds that are eligible but not yet generating performance fees. So at an earlier phase in their lifetime, but if we keep up the performance, we also have a healthy pipeline of performance fees for future years to come. Regarding our dividend policy, I mentioned that already before, but our objective is to distribute an annually growing dividend to our shareholders. We've been doing that now for 9 consecutive years. Last year, our EPS was 21 cents. We distributed 15 cents for the first 9 months of 22 cents EPS. So quite good starting point to also potentially distribute growing dividends for 22 going forward. Also looking at the share price, the proof is in the pudding, I guess, but for the past 5 years, our share has been performing quite nicely. Our total shareholder return, 16% per annum, outperforming both the listed European private equity benchmark, but also the OMX Copenhagen Total Return Cap Index. Right now, our share price stands at 2.69 euros, and according to analyst expectations, that's a forward dividend yield of 5.9%. So attractive dividend yield also going forward. Here, finally, I have our long-term financial objectives. We seek to grow our management and service business by 15% on average per annum, return on equity 20%, equity ratio maintaining that above 50%, and the dividend distribution I already talked about. And as you can see here on the slide, we have been quite nicely delivering on our financial objective historically and aim to do so also in the future. To summarize, why to invest in CapMan? First of all, private markets exposure. This is an asset class that usually retail investors have no access to. Via our share, you get that exposure. We have a good growth outlook. I think that supports and gives interesting potential going forward. And finally, an annually increasing dividend, giving a solid base for our valuation also during future years. Thank you.
Perfect. Let's catch some questions. Everybody, the whole world is seeing increasing interest rates. How is that affecting your business, both on the investor side? Is it harder to get investors that they get alternative, and in your investments?
Well, so far fundraising is still advancing well, so we are able to get new investors. Of course, there's some volatility in the market, not maybe driven by the interest rates, but overall the global turmoil. So I think the interest rates as a standalone will not be something that will hamper the attractiveness of private assets or our performance going forward. I think it's more of a general economic development type of a situation. But if we I need to highlight here that private assets historically have actually been outperforming the most during times of trouble. So the last couple of years until this year, the equity markets were generating stellar returns. So the outperformance, although it's been there, it's been narrowing. But when you look at the history and times when the public markets haven't been performing that well, that's actually when the private markets have been proven the most resilient. So I think from that point of view, it's also promising for us in the future.
And I actually think the next question maybe touch upon it. There's some talk that prices in private equity haven't really come that much down as the public market. Is that a problem in your investments? Are you a little bit awaiting? Is that the cash in your bank account that it says, hey, we need to catch up a little bit about prices that have come very fast down in the private market, but maybe it's a little bit lacking in the public market and a little bit lacking in the private?
Yeah, that's a valid point and a valid question. But I'd say that in terms of what has been driving our fair values during this year, it's mainly the realized exits and realized financing rounds. So basically, as the public markets, they're of course the multiples, the relative valuations, when they go down, that leads to a negative impact for us. But we don't just focus on relying on asset allocation. We focus on active value creation. So when we are able to improve the performance of our companies, of our assets, then when the underlying cash flows are going forward or developing positively, that then, at least during this year, has been able to offset and then some the negative valuation impact. As I mentioned, realized exits being the main driver of the value increase during this year. So yeah, at least at this moment, I'm quite comfortable with the values that our balance sheet right now is representing.
And then there's a question, how do you work with ESG? You touched a little bit upon it, and if I should put it a little bit more out, the greenwashing, it seems to be a big issue, discussion in the private equity and by some of the large investors, right? How to avoid that, and really make sure that the companies you invest in is ESG compliant and so on. So how do you work with that subject?
Yeah, that's a very good question. I think it's a manifold question. In terms of what's happening in the market right now in terms of the greenwashing, I, for example, am very happy that we're getting new standards. The CSRD, the Corporate Sustainability Reporting Directive, we have the taxonomy, even though it leads to a lot of reporting, but that also gets standards that everybody has to then apply by, and the reporting will sort of be more comparable across companies. So hopefully we will be moving from marketing to very quantifiable actions and impacts. And we've been working a lot on that. We have both group level targets that we have set out and communicated, and we're also working on having targets set out for all of our portfolio companies. So right now we're in the process of basically basically defining those most material aspects that we have the most impact on. We will be communicating our baselines, we will be setting clear targets, and we will be reporting on the advances that we made. So basically through transparency, also working on that so that we would avoid any sort of negative to get away from marketing to really making an impact.
And a short question here, I guess it helps you to be a Nordic or European investor, right? Because we get the new standards compared to other parts of the world. So will that protect you a little bit?
It's true. The Nordics is already, our vision is to be the most responsible in the Nordics, but I think if we are the most responsible in the Nordics, that's almost implies that we're one of the most responsible in the world. I'm super happy that this is a theme in the Nordics, that we're taking a front runner position in the industry as a whole, but I'm super happy about the development and where we're going right now with this.
Perfect. Thank you, Ada. We will go on a short break and continue in 5 minutes.
Thank you.